Welcome everybody to Crypto Rosetta. My name is Savage and today we're going to be looking at Helium. Before we jump into that, just like to say thank you for watching. If you're enjoying the content, please smash the like button, hit that subscribe button if you haven't already, turn on the bell notification so you never miss a video, and leave us some feedback down below. Also in the description you'll find a link to the Discord. Come check it out, it's free to join. Okay, so the last time we were looking at this, which was a while back now, we were looking for the potential of looking at this as a bigger five-wave structure extending to the downside. And we're talking about the fact that we had come up to this 350 range, and that potentially we could start to look for a breakdown from this area. And we did actually start to break down, and we've actually come down into the typical zone that we'd be looking for as a fifth wave. So let me just pull this fib onto here. Basically, we've actually come down into this zone. So I'm starting to look for the possibility that we could look to turn around. However, there is also the potential for, as long as we remain below this $1.94 region, we could actually still see a push down towards this zone of this 101 to this 86 cent range. So this is what we're looking for within this count, where we're actually still looking for that continuation to the downside in a fifth wave move. And this could actually then look to complete this whole sequence, which could then mean that we start to see a bigger move to the upside play out from here. The key thing though is, if we do have this as a five-wave structure, what we will have to be careful of on the retracement is basically a move back into this typical B wave location, because if we're looking at this as a five-wave move, it would indicate that we're actually going to see continuation to the downside, and that what we'd then be looking for is that potential for a three-wave move up and then continuation and actually setting a new low again. So this is what we want to avoid. If we are counting this as a five-wave structure, then basically, that this would imply that we are going to see a potentially bigger correction to the upside, which could be anywhere as high as this 23.92 to this $7.87 range, and then actually look for further rejection to the downside. If this is the case, that would be a substantially lower low here, depending on how high we come up. The alternative way that I'm looking at this is potentially rather looking at, and we talked about this being a WXY into this low, but then we've actually set another low here. So that's making me think that, we have the potential of looking at this differently here, where we could have a WXYX, and then we're actually looking for this Z wave to the downside. So the Z wave 1-to-1 is actually here at this 0.7382, and basically what we're looking for is this as an A, B, and potentially a C wave to the downside. So what I'm looking for here is that potential to actually come back up higher here towards the zone of this 267 to this 194. So a three-wave move up into this zone could potentially indicate, that we get further rejection and look to break down towards this lower range here of this 1-to-1, which would bring us here to the 0.73 range. But the 1-to-1 of the W wave, which is the beginning of this move, would actually be this 37.59. So the 0.618, which would be a common zone if we do look to push down here. This would be sort of a minimum I'd really be looking for of this Y wave to be, would be here towards this 87 cent range. So I'm going to be keeping an eye on this, irrespective of whether we're looking at this as a five-wave move. Potentially we will see a similar sort of target. And what I'm looking out for is a potential retest of this bottom channel. Doesn't have to happen, but at least coming down and setting another low here. And that could look to sort of take us towards this 87 cent range, or even the 60 cent range at the 786, or possibly even as low as this 37.59. So this is what we need to be just cautious of. Really, until we actually get a break back above 340 and this 345, we could actually just see this continue to sell off here. So we need to be careful. The structure is a bit strange within here. And it is possible that we could be extending out even further here, and this could be maybe a bigger five-wave move, that is actually still in the process of extending out, where potentially this becomes 1-2, we get another 1-2 here, and then we're still within a bigger third wave. But there's not enough there's not enough information to say that we are approaching this low that we had previously. So it'll be interesting to see whether we continue to reject off this, or whether we can start to break back above this. But really, until we actually start to break out of this channel, I will still be looking for that potential of a rejection if we do move up into these higher ranges here. Potentially we could see some structure develop here to the upside, and we could actually push up into these zones and continue to reject. However, we also need to just be aware that potentially this could already be a B wave in here, even though it's not my favorite interpretation, in which case we could already be forming this as an A wave, forming a B wave here, and then looking to break down. So it's going to be key if we want to look for higher prices to get back above, obviously, this low point that we had here, this $1.53, getting back above this high of this $1.90, and then basically, getting back above this X wave high here. Once we cross this high range here, basically what we then have is we can't extend out from this point anymore. So we'd have to just obviously be careful of some of key structural zones. I mean, next area above this would be this 392. But basically, what we need to see is a break back above this, and then sort of watching the structure and seeing what clues that gives us as it develops. So this is the two bearish counts here. I'm potentially looking now to see whether we can actually get a break to the upside here as well. But for the time being, there really isn't much to go off of. The only way we could really argue that we are getting something off of these lows, um, would be you'd have to say we complete into here, and that potentially, we're starting to form this as a wave one and a two here, and we could see something like this play out. But, we'd have to see a substantial move to the upside for confirmation of this, and we'd need to get back up into these higher ranges. I'm going to just throw this fib on here. So I'd be cautious of this 1-to-1 at this $1.65. If we just get a three-wave move here, A, B, C, which only comes up to this 1-to-1 area, potentially this could be setting us up for that further rejection of that fourth wave, and then we could actually look to come back down deeper into this 127 to this 93 cent range. Alternatively, if we do form a bigger move up here and we form something and we actually look to push up these higher targets, so form this as a 1-2 in here, and then basically would be looking for evidence that this is a 1-2 here, possibly even another 1-2, and then we start to push to the upside like this. But really, we would have to keep maintaining these lows here, and given the current structure, I wouldn't really want to see it drop back down below this area here of this 123.19. Dropping back below 123.19 makes this very unlikely. The only problem is, like, we need to actually see this start to move away from these lows now. And the only way that I can see it currently is that either we're forming some kind of a diagonal here where this was 1, 2, 3, 4, and 5. Then we'll come back for another wave 2, and then we look to progress. Or, we're extending out where this is 1, 2, 1, and we're going to get a shallow wave 2 here. But if that's the case, really we need to start breaking even higher if that's a 1 and a 2, because we would want to see this actually get up towards this $1.80 region until we actually start to break here to the upside. It's very easy to just count this as corrective structure. So need to be careful, really, for as long as we stay below that fourth wave target area that we were discussing earlier in this 5-wave move. This potential zone of anywhere between this 145 to this 194 range. We need to just be a little bit cautious. That's why I say, even if we see something like this, where this becomes A, B, and we get a C wave up to here, we can come back down, retest this zone, and then we look to push up one more time, something like this. We still need to just be cautious in this zone of this 194 to this 145. For as long as we remain below that and we continue to face rejection, we need to just be careful that we aren't going to extend out and look for this lower target range of this 95.45 area here, and that we could actually be looking for these lower targets still. So we're going to have to keep an eye on it. There is potential to break up, but what we need to do is get back above those price points we talked about. This $1.96, that really needs to get broken here for us to start looking at the possibility of having a 5-wave move. And what we'd want to see is something like this develop, potentially as a 5-wave structure here. Then we'd want to see a 3-wave move to the downside and then look for that continuation. If we did move up to this 1618, this could then lead us into a possibility of pushing up towards this zone here of this $2.18. And then we could actually look for, further support to come in lower down here. Obviously, this is speculative at the moment. I don't have all the structure to work with. But basically, we could then be looking for something like this, where we actually come back down for a fourth wave, look for support in this zone of this 165, and then look to push up towards this higher range here of this $2.18 to this 204. But even if we do get a move up here, like I said, really until we break through this top channel here, I would be just cautious, because the WXYZ option is looking for this move to rather do this A, B, and then C to the downside. So that's what we need to be careful of within that structure. We need to just be a little bit patient with it, and just get confirmation before we look for that to get too bullish here. The WXYZ, like I said, this is right in the rejection zone. This top channel line here, this $2.67 to this 194. So really, until we break through this zone, I will still be looking for that potential to come down lower here. We need to see more structure here. This is very choppy and overlapping, so yeah, we don't have too much to go off of saying that it's completed. So for as long as we remain below this area, just be on the lookout that we could still see lower prices here, whether that's between this 93.18 to this $1.26, another drop for that fifth wave, or if we do push down deeper, this 87 cent, 60 cent, and then finally this 37.54 would be an interesting zone, in my opinion. Okay, I'm going to leave it there. I hope you found it useful. And if you did manage to take advantage of actually this move to the downside, let us know in the comments below. Yeah, always happy to hear from you. Also, in the description, you'll find a link to Discord. Come check it out. It is free to join. As well as that, there are affiliate links for both Primex, BT, and BYBIT down there. Both great exchanges we use on a regular basis. Check it out for yourself. If you don't have an account, using the affiliate link does help support the channel, and we do appreciate it. Everyone have a great day. See you in the next one. Take